Hello everyone, I am Rinku, working as an assistant professor in Department of Management in RPIIT Technical and Medical Campus. Today we are discuss about the topic that is activity ratio, also turnover ratio. The efficiency of firm depend on efficiency of the management in using the asset. These ratio measure the efficiency. The efficiency with which the assets are used you would be reflect in the speed and rapid of the which assets to convert into sale. The highest rate of turnover and convenience higher efficiency utilization of assets. There are also standard ratio gain of activity ratio. Active ratio indicate the performance and organization. They indicate the effective utilization of the various assets of organization. Most of the ratio falling under the category in the base on turnover, hence their ratio are called as turnover ratio. Important ratio in activity ratio. First one, stock turnover ratio, inventory turnover ratio. Second one, debtor turnover ratio. Third one, creditor turnover ratio. Fourth one, working capital turnover ratio, fixed asset turnover ratio, current assets turnover ratio, and last, total assets turnover ratio. First one, stock turnover ratio and also inventory turnover ratio. This ratio also called as stock turnover ratio. These are ratio measured to speed with the which stock to goods is converted into sale. It is also telling whether the working capital investment in stock is being used the maximum extent of the node is calculated as under stock turnover ratio is equal to cost of goods divided by average stock. Average stock is equal to opening stock plus closing stock divided by 2. Note, when opening stock is not given in question, the closing stock will be used in place of average stock. Significance and note, if indicate whether stocking efficient has been used or not. The higher of the ratio there is, that is better it. A higher ratio indicate more sales are done with less investment in stock. Second one, debtor turnover ratio. This ratio explains the relationship of the net credit sale of firm to its book debts in indicating the rate of the which cashing is generated by the turnover receivable of the debtor. This ratio also receivable turnover ratio. Receivable means is the total of debtor or bills are receivable. This ratio helps to measure that how efficiently and receivable of the managing the business. Debtor turnover ratio is equal to net credit sale or net sale divided by average account receivable means average debtor. Average account receivable means average debtor is equal to opening debtor plus closing debtor divided by 2. Average calculator significance a higher debtor turnover ratio is good for the business. It indicates toward the efficiency of credit collection staff. Similar, the average collection period should be similar of the time period, better it than. And third one, credit turnover ratio. It is a calculate like debtor turnover ratio and average collection of period. Credit turnover ratio is relationship between the net credit purchase and average account payable. It calculated to as under credit turnover ratio is equal to net credit purchase or net purchase divided by average accountable payable. Average creditor is equal to opening balance plus closing balance divided by 2. Average payment period, number of working days divided by credit turnover ratio. Average payment period is equal to 52 week divided by creditor turnover ratio. And next, working capital turnover ratio. It is a measure that how many time working capital are convert into sale. It is a calculating as working capital turnover ratio is equal to cost of sale or net of sale divided by average working capital divided by net working capital. Net working capital is equal to current assets minus current liability. Fixed asset turnover ratio. This ratio measures that who for the fixed assets of a business have been utilized to increase the sale. It calculated by dividing net sale or cost dividing as sold for the net fixed assets. Net fixed asset turnover ratio is equal to net sale or cost of goods sold divided by net fixed asset. Net fixed assets is equal to fixed assets minus depreciation. A highly ratio indicate better utilization of fixed asset, whereby the low ratio indicator under the utilization of fixed assets. It helps to measuring the efficiency and the profit earning capacity in the business. Total assets turnover ratio. This ratio establishing a relationship between total assets and sale. This ratio enable to know efficient utilization of total assets for a business. Total asset turnover ratio is equal to net sale divided by net total asset. Either ratio 2 times. High ratio indicates efficient utilization and ratio less than in the two indicator and utilization. Thank you.